Okay, welcome to our second minicast for Washington Capital Partners. I'm Jared Fausnaught, and I'm joined by Kevin McGaughey. Today, we're going to be talking about some very cool 2021 market updates. We've spoken at length about 2020 and what we saw as some recaps. We may touch a little bit on that today, this morning. But overall, we're going to shift our focus to 2021 and really try to talk about some broad general market trends that we're seeing, both in finance, on the development side, and really try to hit it all. So I'm excited to get into this today and get your thoughts on the market, Kevin.
Yeah, yeah, awesome. I got to say, also, this might be a first for 2021, but I think this is the first time I've ever been introduced in any situation and someone has said my last name correctly. You've been my boss for years, so I'm glad, but it was still unexpected. So thank you.
Excellent.
Thank you, thank you.
I'm glad I didn't mess up the one requirement I had.
Yeah, yeah. So I think the place to start is just to say how lucky we are to be here with and have the opportunity to invest in 2021. I mean, some people aren't here anymore with respect to investing, but some people aren't here anymore at all. We lost a lot of American lives this year. DC's hospitals are still overrun right now, but DC is a beautiful place, and our market is just as strong now as it ever has been. The deals, luxury condos still selling, not that many days on market, and that's one of the things that we really look for. We've had investors have a lot of success. So just a general statement.
Yeah,
happy to be here.
absolutely. I mean, it's really crazy to think that the market, in DC and the real estate market has not kind of missed a step at all. We saw a big impact, obviously, on the finance side, but for most people, things kind of kept chugging along. Obviously, everything in landlord world, that's obviously a little shaky, and commercial real estate's a little shaky. But from the fix and flip side of things, everything's been strong. We did see some of our some of the investors that are in our network kind of move to the sidelines and just those that are more cautious and risk averse decide, do I still want to be in here right now? Do I, is it a wait and see approach? So yeah, I'm really happy that everybody's kind of kept, for the most part, all their fingers and toes. And I'm seeing more and more volume come back as we enter 2021. So yeah, great point. Everybody, hopefully we get these vaccines out and get everything back to normal and continuing for sure. So yeah, really good point.
Yeah, and speaking of just people ready to buy, there comes a time in the life cycle of an individual where it doesn't matter what the situation is. If it's that step in your family, you're going to look to buy a home. And congratulations to yourself, just sitting in your beautiful home right now. Yeah, I mean, that was that technically 2020, or was that a 2021 purchase?
Technically, yeah, technically 2020. Yep, my wife and I did buy a house, so I was going to throw that in. Good
Oh,
segue.
sorry.
No, you're good. This is a good segue to some of the topics that I wanted to hit on
Sure.
as part of this. Try to keep the conversation flowing and organized. But yeah, that's one of the big things that I'm seeing from 2021. I don't know if you're seeing the same. We've got interest rates at an all-time low. For our property, we're sub 3%, which is just nuts. Like for the last 20 years, we haven't seen really anything close to that. And I think that's driving a lot of demand right now. Obviously, when the rates dropped this last year, you saw huge numbers of refinances on the lending side, but you also have seen more purchases. I think that's drawing a lot of these millennials that maybe were in mom and dad's basement or whatever out of the woodwork, and they're ready to buy. So it's creating a ton of demand. And yeah, I mean, it'll be really interesting to see all this money being pumped in by the Fed, and whether we have to get to a point where we're even lower, basically zero on the rates, or even negative negative interest rates like we've seen in Europe. So I don't think we're there yet, but I think this has been a good test case on lowering those rates and creating more buzz, more energy in the market.
Yeah. And for, what does that mean if you're an investor looking to capitalize on the situation? You take out what can a first-time home buyer afford? What are they looking for? What are young families looking to buy when it comes to their first house? And so just keep that in mind. Maybe now is the time to get in, get out on some really quick flips, between the 250 to 500 value that you can, there's going to be many, many showings, because those are what people are really looking for. Single family homes, townhouses, things like that you can get in quick, fix quick, get on market for someone to buy.
Yeah, absolutely. Jumbo rates aren't quite as low, and that cutoff is right around 750. I believe it's 765.
Yeah.
And so the rates are a little higher there. But yeah, I personally am seeing way more activity below that mark and just, conventional lending. And then above that, there is some movement there on the luxury side, over $1 million. If you can get in with lower rates and pay what you would have paid for a much smaller amount of house, people are losing their minds over that. I think that's really driving up costs on the new build side. Like that brings me kind of to the next topic that I'm seeing for 2021. Delivery rates for new home builders nationwide are at an all-time high right now, and they're just pumping this supply out just because there's such low supply.
Yep.
So
low supply on all angles. So not just low supply with respect to buying newly nice renovated houses, but low supply on the investor side when it comes to purchasing their next flip, right? So it's much harder to find something that works. We'll talk about this, I'm sure, later on, but it's a wholesaler's market right now is what we're calling it. And so, maybe it's time to take a look at what your investment strategy is, get something where it is, a piece of land that you get planned and permitted to tear down a new build, something that you maybe didn't think about previously, because like you said, so many people are looking to do new builds right now because it's probably the way to go.
yeah, and what's interesting is I don't think the finance side has really caught up with that demand yet. Like from our competitors, we're really not seeing everybody even have a ground up product, kind of like WCP has. So, people should definitely take advantage of that. We're going to try to put out more informational content around like entitlement plays and stuff like that, whether it be in DC proper or, Maryland or Virginia. But yeah, now's a really good time to do new builds, just primarily because there's just no supply, like you were talking about. The wholesalers are in complete, control. They've got all the leverage right now because the hardest thing to do is find the house with a good margin. So that's why you're starting to see more development on the condo conversion side, more development on the new build side, because that's kind of the last holdout for really solid margins.
Right.
With that, there's more risk for sure. But if you want to be in the space, if you want to be investing, that's the name of the game. So we're definitely seeing that, and low supply, high demand is driving up all these prices too. Mm-hmm. One thing that we're really focused on for 2021 is and the political and commentary, news media commentary folks are already chattering about it. I don't know if people have seen that picked up if they're watching the news, but everybody's buzzword is bubble. Are we reaching bubble territory in the market? Obviously more so, less in real estate, but I think you'll start to hear more of that term, from where I'm sitting. And I don't know what your thoughts are, but I don't think we're there yet. I think the reason you're seeing such massive increases in home price appreciation is just over the basics of the supply and demand curve. And right now, it's lack of supply and high demand, and that's driving everything. This is not like a 2008 scenario where you have bad banking practices that are rotten to their core, and that's ready to like collapse the market. It's actual economics in play. I think we do have to be careful of an overheated stock market and how that like spills over to real estate, but I don't think we're there yet. So
Yeah. And then just to go even a little more granular with that, because we are in DC, one of the most stable economies in the world, we do have a new party in power, and the biggest complaint from the other side for this party in power is that there's big government, more government spending, and in order to spend those dollars, you usually need to put more people in work. So they're going to be employing more and more people. More and more people are going to be moving into DC. I think last year we had 15,000 people move out of the city, which we won't see that again. And that's not the normal trend line. We'll have people coming back in. There's less people worried about the virus with the vaccine rollout, and that's just going to obviously continue once people are actually getting the vaccine. So I think that, like you said, overall, from a housing market standpoint, you don't really see that there's a bubble, but from a DC housing market standpoint, I think we're even a little safer. I hope we're not wrong when it comes to this, but there's more than just the national trends and the basics of supply and demand that show that we're going to, stay strong. There's other factors, including what everyone has been talking about for years is, Amazon's coming and things like that. But I have friends that work for Amazon. They are an employer that provides if you work for the company, obviously that provides a wage that allows you to be in a position to buy. And millennials are in a life cycle position where they need to buy.
Yep. Yeah. All great points. I feel like people forget about Amazon, and definitely it's the conversation has to be around, your MSA specifically. Obviously, every market is going to be different in the US. And DC does have the advantage of, stable jobs, regardless of administration changes. For the most part, we're a very stable market. I think that's why I've seen more and more people from outside of the area, investors coming in to find, rental portfolios and things like that. So I just literally spoke with somebody yesterday from South LA, and they're like, yeah, this is the market to be in now. I've been talking to a lot of people in California that are coming over here. So I think we're going to see that increase. And that's a really good point to segue into kind of the next topic about the administration change and like what we may be seeing coming down the pipeline. I agree. I think you're going to see a population increase. I love to throw the stat out. I just am amazed by it specifically in the DC market. But by 2030, we will need 357,000 units in order to keep up with demand of population growth. Now, at the time of that data set being released, we obviously weren't in a pandemic. I think that maybe set us back a little bit, but I agree with you. I do think that you'll start to see more of the population come back into DC, especially with the vaccines, and everything kind of getting back to normal. So, but yeah, as far as the administration, some of the big changes, keep in mind, like, I don't believe the Biden administration has formally set out what their policies are on real estate in general. Some of it obviously has overlaps in like taxes and other things like that. But a couple things that have been hinted at. So this may not be 2021. Everybody knows like it takes years to sometimes get, new tax policies and other policies implemented and through legislation. But one of those we've been hearing chatter on is the potential removal of the 1031 exchange, which is would be pretty a pretty huge shakeup in the real estate world. That's one area where real estate investors have been able to defer capital gains and basically step up your property. So like, take a $100,000 house, sell it, don't recognize the gains on that sale, and just use that to buy real estate on your next property. For those that don't know what a 1031 exchange is, it's just basically part of the tax code that allows realtors to shelter income as they buy new houses. So it encourages continued purchasing and keeping money in the real estate market. So that's one big thing. I don't know if you had heard that one.
Yeah, no, I had heard that one. There's obviously always going to be, rumors and stuff like that, but I had heard, some stuff about the other candidates and what their ideas were as well, which isn't, it doesn't matter now because they didn't get elected, But I think realistically, as long as there's not general overwhelming fear in the marketplace, the 1031 exchange is going to be huge if that happens. But how many investors does that affect? How many new home buyers does that affect and stuff like that? So hopefully it won't be a huge downturn. But if it is affecting you, obviously that's something to know about. I think one of the things that is I don't know if it's disappointing. I don't know exactly what the word to use is, but if they do start, if they do immediately institute travel bans again, which it seems very likely to do, you're having a lot of foreign money that remain on the sideline, which is something that I didn't expect for 2021. You have a lot of Chinese buyers in this market, especially in Northern Virginia. And if that money is not allowed to literally come here physically, it's just something that we'll see the effects of. And realistically, that's probably going to result in a little less inflation because it's commonplace for those cash buyers to bid up on properties. And again, a wholesaler's dream, but for the average investor, that's a good thing.
Yeah, totally. I mean, I think long-term trend on that front, specifically with China. I mean, as the last administration was starting to get a little harder, taking a hardline stance on China, I think we'll see less and less Chinese investors in the market. Obviously it's tough to tell, and it could change administration to administration, but yeah, that's a big thing. Obviously, you did see more investment in the New York market, like traditionally, but I have personally seen a lot of foreign investors in the DC market. So yeah, that's a really good point. One positive thing that I saw was the idea that maybe opportunity zones would not be removed. I think initially some thought that the new administration would scrap that altogether, but it sounds like now we would just maybe increase the regulation around it, put some more rails around it, which is never, it's not always a bad thing, but actually keep some of that program. So that's promising. I think some people would like to hear that. But overall, I think it's a mixed bag. There's going to be some good things. There's going to be some bad things. Everybody wants to, put the next administration is going to want to put their stamp on it. So I think overall, a phrase that I heard recently that I loved was like, your president is not going to save you. If you want to be successful in real estate, if you want to go out there and just crush it, you just need to get out there and do it. Don't worry about politics and all that kind of stuff, and just put your head down and grind it out, and you will be successful. So
100% agreed. The last thing, just to bring up one more thing, is obviously there's no, again, I'm bringing it back to where we're at in DC as a whole. There's no change power here. We're not going to see any pullback on the government rents, and everyone loves the government rents in this area. So if you're getting Section 8 vouchers, or if you're thinking about doing it, I know they still need to place a whole bunch of people. There's a waiting list for that. So they will, the government always pays. So if you're looking for an investment strategy for 2021, that may be it.
That's a really good point. Yeah, there's some really great Section 8 projects that I'm seeing throughout the city, and I think that'll continue to be really attractive for a lot of investors. I've started to see more long-term hold type plays.
Yeah, for sure.
As we've gone, kind of evolved as a company and grown our network. So yeah, I agree. That's been nice to have that kind of as a cushion for sure. What else we got? Yeah, I mean, there's some other kind of broad trends that I'm seeing. Large multifamily mixed use type projects are still going really strong. We're still seeing a lot of projects in the pipeline in various stages of permitting in DC specifically, and a lot of that are already in the process of delivering. There's some really massive square footage going in Northeast, Navy Yard, Buzzard Point. I think you're going to see Buzzard Point in DC as kind of the next wharf. It's inevitable that it's kind of moving in that direction.
Right.
And you're going to see some really cool projects in that area. But yeah, I think the trend there is just wherever bigger developers can get larger swaths of larger parcels. A lot of that land is in northeast. It's going to be harder, I think, in northwest. Up the Petworth corridor, just because there's just less available land. Probably less, west of the park as well. So I think northeast, Navy Yard area. That's all of that is just primed for huge development. And I think even on the opposite side of the Anacostia, just again, because it's so open, you're going to see a lot of huge projects taking place over the next 10 years. So.
Right. Yeah, for sure. I'm in Union Market. That's where I live. So I'm sitting in my apartment in Union Market. My apartment's done, and on all four sides of me, there are multiple apartments going up. There's an office building in front of me. It's beautiful. You look outside in my window every morning, and I see this beautiful construction zone. I have to my right, I have a brand new apartment building. To the back, there's 4 going in. That's where Union Market actually is. And to the left of me, there's one that's basically just now a frame. So every single morning, I'm woken to the wonderful sound of construction beginning.
Jackhammers in the morning.
Jackhammers in the morning. There's no better way to wake up, just as nature intended. But seriously, I mean, it's the same here. I think that if you're going to be investing, these are places that you might be priced out soon. And so, where's the next spot? And a lot of people for a long time have been saying that if you're going to get granular and look for a neighborhood that you want to invest in, that still hits what we were talking about before. What can a family afford? What can a first-time home buyer afford and qualify for? It might be the Deanwood. Look for a Deanwood single-family home. I love the Buzzard Point, by the way. I think that's a really good one as well. The only other one that I want to bring up was Deanwood.
Deanwood is. I feel like you've seen a huge amount of turnover in houses and just new housing stock with rehabs and stuff in Deanwood for sure. And I think, to expand on that, like Anacostia itself is going to be transformed. There's already some pretty major projects going on, like the McKeedy Group, I believe, is doing a development right in downtown Anacostia that should be a nice anchor point for then other development to come in throughout. And there's some really good stuff going on over there, and a lot of ground up work that I've seen personally. I definitely see that trend as well. But whether you're in multifamily or you're doing single family flips, there's a lot of opportunity to be had in DC. And speaking on the ground up thing, we're seeing a ton of stuff in Alexandria and south of Alexandria as well, with like these single family little cottages that are investors are going up and back on, capturing additional square footage, almost building brand new houses. That's been really hot. I've seen a lot of that as of late. I think you're going to start to see more development around National Harbor, and Fort Washington, I think, is going to be one of the first places that kind of appreciate in Prince George's County, outside of like Capitol Heights or what have you. That there's a ton of flips going on. So there's all throughout the whole area. I mean, we're seeing a lot of good development.
Yeah, Oxon Hill is another one.
Yep.
I mean, those places are in prime position. 15-minute drive for me where I'm at. So if this area is creating a lot of new jobs, which hopefully it is when all these buildings are created, that's just going to drive more single families to settle in these areas. Not just in the city, but in the neighboring suburbs, we're going to see, an increase in people trying to settle down. So it's all good for the average investor.
Yeah, absolutely. I don't have really any other topics that I wanted to hit as far as the market update. Was there any last minute items that you were thinking to cover?
So just some things to touch on. The price of materials. Maybe we talk about.
Yeah.
Crazy increases. I had written a note down for another presentation that I did. This is from December. Let me see. Yeah, so just lumber itself, just a piece of wood, is up 170% across 2020. So that stuff like that is something that we've seen. I know both of us have seen people come back with, here's our budget, and then a week later come back, here's the actual budget. It's higher than we thought it was going to be because prices just aren't the same anymore.
So I've seen that.
The other thing is the permitting has been worse than it ever has been. You really got to be careful with where you're going, and some spots in Southern Maryland are actually worse than they've ever been. Anne Arundel and Howard, I've heard just absolute nightmare stories. I know you've probably heard the same.
Yeah, it's been bad. I mean, obviously COVID, DCRA wasn't great before COVID, and then with COVID, it's even worse now. That trend is going to continue for, as long as COVID is around, probably. So yeah, what I'm telling any investors that I speak with is just add in additional wait time for getting plans and permits through, at least specifically in DC, but we see delays in other municipalities also. So, allow for that. If you're doing your pro formas on your deals, have higher carrying costs in there, maybe add a couple extra months just to be safe. If you were at, 4 to 6 months, maybe you put in 8 months for your carry costs on that, just to be doubly safe. But that's been a really huge delayer. And also on the rental side, right? Like, we've seen an extension, a moratorium extension on evictions in the city, which is continued for now. So landlords, if you're not collecting, that may continue for the time being if your tenants aren't paying you. And I know that's challenging. I mean, it's a challenging issue on both sides. We definitely don't want to create an incentive to kick people out on the street in the middle of a pandemic.
Right.
And then, on the other side of that, it's like, if lenders are demanding payments from these landlords, they're in a really rough spot, and we could see, increases in foreclosures from these lenders if they're not able to pay.
Right.
So definitely kind of in between a rock and a hard place, I think, on that front.
For sure. That's something that, again, we come back to, if you're going to change up your investment strategy for 2021, maybe you do get Section 8 in there instead of a traditional renter, because the government's not going to back out of their contract with you. So just something to think about. The other thing is you're sitting in your home office. I'm sitting in my den, which I've created into an office. If you're putting a house on market in 2020 and you don't have ample space for home offices, you don't create something, you don't stage it as such, give people an idea of what could be, you're missing out. And you're going to possibly get passed over for something else, for another property that added the den, for another, if it's smaller, that staged it with, here's 2 home office spots and stuff like that. Because
great point.
We're all in the same situation. We're all working from home. All of us that are lucky enough to be able to work from home. We're all working from home. So that's something that the buyers are looking for and the sellers need to understand.
Yeah, really great point. Yeah, I mean, and you're seeing that in the new build world, but if you're rehabbing houses, you got to be thinking ahead of the curve and really making sure whatever plans your architect or you're coming up with, accounts for that. So great point.
Yeah, and with everyone more at home now than ever, you may want to, more now than ever when you're an investor, look at the comps that you're going off of. Make sure that you're developing up to the level of the comps at the very least. There's a lack of supply, but there's a chance that you do get pushed to the side if you're not meeting that mark that other people are doing. Whereas in the past, things that you put on market, they'd sell. Just with everything taking longer than it already is, you just want to make sure that you're not also taking longer on market. So
Yeah, I definitely don't want to just slap something together and throw it on market. You're not going to get the results that you want.
yeah, for sure. I don't know. What else you got?
That's really it. I feel like we hit a lot of topics. So kind of like a blitz of information for everybody that's at home taking notes. Our goal is to continue to do these mini casts, just to have more conversations about the industry, about what we're seeing. I feel like we're in a really cool spot in the market, like with our vantage point being a lender, touching so many different investors that we owe it to the marketplace to try to give back these trends that we're seeing and disseminate information wherever we can just to help everybody. So very excited to keep the minicast sessions going, and I'm sure everybody will see us at some point again, just hashing through these conversations and topics, debates. But yeah, really looking forward to it. And otherwise, I really appreciate your time. As far as Washington Capital Partners is concerned, anybody that's interested in getting financing for any projects that you're looking at, I would highly encourage you to check out our website. You can put in an application, speak to one of the awesome loan officers, like one of our senior guys like Kevin, and really get some help and a creative structure that you might not otherwise have been thinking about. Just let the team look at the deals for you, underwrite them. Obviously we give free underwriting, so a lot of value that we can add to you and your team. So definitely check us out if you're looking to buy, whether it's a fix and flip or it's a long-term hold. We are very close to getting out 30-year products, so very excited about that. A lot of big things coming for us as a company, and hopefully passing on cheaper rates and better leverage for everybody. So excited about it.
Yeah, I mean, everything that we talked about today, the fact that we think that we're in a good position is echoed by our company. And like you said, we have great rates and we have higher leverages than we've ever had before. So hopefully can get you into if it's not your first, get you into that next investment.
Yeah, couldn't have said it better. Appreciate your time, and we'll see everybody at home on the next one.